Hello and welcome in from Sunnyvale, California, and deep within the bowels of the Vieira compound. I'm Mark Vieira. This is my technical analysis. Go along with my weekly trading log. I'm going to go over some images with you, and you can find me here at hotstockmarket.com. Have a trading log there. You can see what I'm trading. But this video right here, just going to do some basic technical analysis. I'm not making any buying or selling recommendations, and the past is no guarantee of the future. So, take a look quickly how the week that was. So the week we're up 1.34%. June started off on the same note. Q2 is a little over 4% and almost 5.5% for the year. So I'm going to queue up some charts, and I think the theme of this video, much like last video, I think is going to be more or less just no sign of volume. And we'll get into the significance of that. Let's get a monthly chart going here. So here we go. I'd like to start off with a monthly chart, kind of looking back into the past, and then I think the closer we get, we go into the weekly, the daily, and then when you get into the intraday, what I think happens is, the further that you go back out in time, the less connection to the present that you have. Conversely, now, once you get into the hourly charts, and then you get into 15, 10-minute, 5-minute tick charts, it's just all noise. So there's a distortion there too. So I think, when you get into the daily charts, those have to be the most universally dynamic, and that's a balance, I think, is probably where you're going to find most of the useful information in terms of the present. So, there's just different ways to look at how time flows, and there's philosophical in that too. Now, this is the current candle going on right here, and it's not closed. We're going to focus at the previous top right there as being the support for obvious reasons. So the focus is mostly on the closed candle. It's a bullish candle, and the other thing now to note, I think, would be that the current candle is poking off, and this is a tight trend line that I've got. It's really trying to capture these bodies here. It's capturing this body, and so it's a pretty tight resistance trend line that I've got. And price is rearing its head up above that. Other than that, that's it for the monthly. So as always, going to just take a wide lens view here, basic overview of where I have these trend lines. Looks like this one is going to have to ultimately be redrawn. Excuse me. And, we're just a clear break of this trend line. So this is more of a focus what we just looked at on the monthly chart. This is zooming in now, and we can see more separation in terms of candlesticks here. I'm, almost reluctant to call this three white soldiers, because three white soldiers is a bullish reversal that you find in a downtrend, and it's a reversal pattern. It's a three candlestick pattern. But I'm going to throw that in there because of these 2 weeks, and I'm going to say that sideways action is a correction in time and is as downward, I think, as this market is allowing. So main thing to come away from this is the break of this key trend line. Now that is going to be support. Resistance turns into support. Tops become bottoms, bottoms becomes tops. You hear me say that a lot in these videos. So what else can I say? Let's look at another weekly. Okay, this weekly here is some just going to capture these bodies. I like to capture bodies rather than the peaks. I think you get a tighter trend line. and just showing that this has some room to go before we hit that resistance. You know, between 1965, 75, you know, I don't know. That's going to be a tough spot in any case. That's all I want to show you, just some room to grow there. So this pattern, this measured move, had this drawn for quite some time. Had a corrective phase here, and then just showing that we've got a target met, equidistant target met on a measured move, and we had an ABC correction with a primary leg and an ABC within the final leg, and just came out pretty much textbook, this measured move. The other more near-term one came to our equidistance target here, this ascending triangle. I had a 1950, 1949. We're right on that target. So let's see, I think we're going to get into some daily trend lines really quick. Get some charts queued up here. Basic wide lens view again, just showing you where I've got the basic trend lines, and then we'll zoom in here, and I've made some other notes. And now these are very subjective. These are very loose. Just I'm going from the lows here, and I'm trying to find price reaction. And now these pivot lines that I'm drawing are hand drawn, and they're very subjective. Okay, and then the other one I've got from these lows to this high, and I'm just trying to find where a primary range would be. So, and I've marked out right here, this is where I think the primary range would be, and then I've got pivots to say, you know, be further bullish above this, or we'll probably come down and find some support off of these more solid trend line pivots. So that's one look at a daily trend channel. Okay. Another one is, this is more of a near term, and you can see where I'm drawing these trend lines. Just you know, of course, the main resistance is a pretty objective trend line, and then you get into more of my own subjectiveness, and if we come, I can even come right tighter in these bodies. It's probably not enlarged too much, but we are poking right above that loose pivot that I've drawn here, and I would call this down here a support, and I would call this where we're at right now as a resistance, because you just don't, here in parabolic mode, you just don't have any previous tops or bottoms to gauge support and resistance. So besides volume would be, you know, your ultimate support and resistance and pivot indications, but then, you know, at all-time highs you don't have any volume profile. There's really no way to look at that. Now, I don't put much stock in you don't put much stock into moving averages, but, you know, I had some extra time on my hands, and here's something fun you can do with moving averages. I don't put a lot of faith in moving averages. I don't think that moving averages actually support price. I think it's volume over time that supports price. But I think in terms of just kind of gauging and getting a landmark reasoning and seeing how price reacted, I'm looking at how every time we had a Bollinger Band contraction from the bottom of the Bollinger Band, and then it expanded, price moved up to where, you know, this is what you could call a Bollinger Band breakout, where it's riding up the side of the Bollinger Band. And it's done that several times in the past. I'm just looking at the last 3 times it did that. And there's a 50 handle rule from the slower moving averages, but I have to be different, and going more of a solid from the 200-day moving average. I'm subtracting the price where it peaked, from where that 200-day moving average was. So okay. So what am I looking at? I got 153 handle difference from the 200-day on this event. I've got 155 when it busted out here. It got up to this point, and I get from 1620. And then let's see, from the bottom of the Bollinger Band, it came up here to 1850. Even here, but either way, subtracted that from 1679. I get 171. Now, I'm not putting a lot of stock or faith in this. It's just, like I said, I had some extra time on my hands, and, I was just doing an average of those three. I get about 160 handle average, adding these three together and dividing by 3. And right here, we are currently, see, I'm marking where we did the same thing. We came from the bottom of the Bollinger Band and did a Bollinger Band breakout here. And from current price, we're 147 handles from the 200-day moving average. So I think in historical average terms, we've got another 13 handles or more. I get 1962, but I think it could go a little further. Like it went to 171 here. I think maybe 1970 before we see some sort of, some consolidation. I think that's also possible. Like I said, this is all just very subjective stuff. I'm just, playing around. Thought I would share that with you. So what's next? Let's look at some chart patterns. Okay, I'm gonna look at some chart patterns from last week, and I've got a fresh worksheet that I'm starting here. The main pattern that I was looking at last week was this rising wedge, and I made the mistake of interjecting what, quote, slightly negative bias on a bullish market. And we're just clean breaking up out of this pattern. This is a busted pattern. We did see the double bottom break out, and this week it went to equidistant target. So it's a bullish market. And now one thing that I missed to go over now is just take a quick look back on the weekly chart. The other thing about these three soldiers, or three, their candle bodies are pretty evenly matched. And what that says is the market's in freight train mode. It's not slowing down. It's just being a freight train. So the candle bodies are something else to look at. Now, in this here, this is kind of a high and tight flag, but more importantly, it's a flat base. And a flat base is a chart pattern, and it's a very powerful pattern in which the psychology is showing us that the market is, what I say, stomping down a base level. So we have prices finding a base, and it's just launching up from there. What I did draw in on this, here's the flagpole. So, the distance between here and here, if you add it to the bottom of the flag, that gives you a rough measurement, which is around that 1970 mark. I think it's going to be until then, and again, like last video, really kind of stuck in this mode where I need to see, and I'm not necessarily going to see climax volume. It doesn't have to happen that way, but until I see something, no-brainer like that, I'm going to keep going with what is the obvious trend. Now, let's see, I think, here's that double bottom. We had a 1930. We did that Thursday. So all of the chart patterns, save the new one here from this flag, are pretty much met, and I think it's time to get into some volume, have some interesting things to point out there. So when I look at volume now this week, I'm really rejecting the whole slightly negative bias. Sure, parabolic mode, is eventually going to stall out, but just looking at, this is a low volume area, and we just did a clean gap, and I was saying last week how some consolidation down to close that gap would be lovely, but we didn't see that. We saw, here is where volume, when I'm, talking about that flat base, this is where volume and price are putting in a base level, and that's where we springboarded from. I'm looking at all of this as Wyckoff reaccumulation, not distribution like what was trying to be sold. So I think this high volume node is going to be a strong support. I'm kind of doubting that it's even going to come to that. Get into some composite. The composites are kind of saying that we should build up some sort of volume support in this area, but we'll just have to see about that. So last week, neutral to slightly negative bias was premature without climax volume, and I think this is the most important thing. I want to see, here we had some above average volume preceding this yet another, we call this a breakaway gap. And then Friday's candle was just about at average volume. But now, I'm looking at when we sold off here and we sold off here, we had at least this much volume behind that move. So, I would like to see some sort of volume indication. That's not necessarily going to be the case. Let's take a look at the next volume chart. So let's see, intraday gives us a whole different, let me move myself over here, gives us a whole different perspective on these flat bases. And we can see intraday, these flat bases, sometimes they're called stair steps. Okay, now what was happening here is we would decline volume, we would have declining volume on these stair steps, and then we'd get a big increase in volume on the move up. Declining volume on the stair step, increase on the move up. Same thing as what we're having here. We got declining volume, and then we closed out the week right here. This was the last candle of the trading session for the week, and I'm changing my mind from last week. I'm going, I think it's, judging from the VIX now, and bugs. Sorry about that. And you can probably hear my fans in the background. I've got the whole house opened up. It's really warm. I apologize for that. So let's go on to the next volume chart. So before I get into composite charts, I like to look at the Thinkorswim's. This is a basic non-expanded monkey bars. And just to go over this stuff, these are month-long, what they call playground. That's a value area. It's where 70% of the activity is taking place. And then you have, your point of controls for within that time period, TPO, POC, and then your volume for the 3-month period. So just to explain, what you're looking at here, it looks kind of weird, all these numbers. But I've got volume by price over here, which you can see these volume nodes that are growing here coincide with the TPO point of control. Of course, point of control is the highest amount of volume that's taking place within that time period. Okay. Now, what am I looking at on this chart is you can see that, there's sort of a magnetic attraction when you look at these point of controls and the playground, where price gets up out of it, and it's almost as if there's an attraction. Of course, the pendulum swung down too far this way. I'm not saying that you can make any kind of prediction from this, but it's just one of those little items that I put in the back of my mind here. Now, two things that price the market sped up. We had this here was the low volume area that we did the gap from, and we did a lot of trading volume in this area, and price overshot out of the playground area. So two things I'm going to say about this is I think this playground area, for one, is going to expand towards price, and I think price is going to want to be attracted to the point of control and the playground. So it's a little bit of a balance in there, and that's why I kind of like looking at the more simplified, a little cleaner to look at. And then now, I also like to look at the monthly composite. Okay, this is last month. This is the beginnings of our new composite this month, right here. So, one of the things in these composites that I look at is the position of where the point of control is to the initial balance, and of course where price opened in relationship, all within relationship to the playground area. And currently, the first week, here was our first week of the month, and our initial balance opened up right here, and we had a little bit of excess going on. I'm going to call right here the top of the previous composite, which is coinciding with a point of control. But I think the relationship where the point of control is to the initial balance, it's at the upper end, is also speaking to a bullish price. Now all of this single print, this is all excess right here. So I do think we are going to see some initial consolidation, and then now really see a better view of that. Let's start zooming in now to these are weekly composites. This was last week. This is this week. And last week my prediction was I drew this initial balance here, and I drew these were going to be the bell curves that I thought were my slightly negative bias. I thought we were going to do some volume construction down in this area, but that didn't happen. I've got pretty much the initial balance right, and we did put out a bell curve somewhat in this area, but we did this gap business here. So looking forward, forgetting about last week, this week, I'm looking at the top of this playground, this volume node, and this top of the playground here. From, I think we'll start out the gate, initial balance here, and I'm looking at just this is this week's composite. How I'd like to see if this bullish leg is going to continue, that we put some structure here in this area. So I drew in. This is where I think volume would be indicated. Get a nice D-shaped bell curve going on in here would be lovely. And I'm going to keep a slightly positive bias because it just doesn't pay to have a negative bias, to say, well, the market should consolidate. You know what? The market shouldn't do anything. It's going to do what it's going to do. And what the market likes to do is it likes to shake out short-term speculation, and that's what it's good at. And it wants long-term investors. Market doesn't like short-term speculation. And as a byproduct of that, we have a market that just is really good at shaking out speculation. It will take out stops. And now here, this is getting too close into, zooming in too far into time frames on a daily composite isn't, I don't think, too helpful in terms of market direction for the week. But one thing I am noting is, you see all these P shapes. This is where, the market took out stops. And you see not so much here, but here you have another, these P shape are short covering breaks is I think what the catch term is today. Big one here before, of course, market takes out stops, and now I think we're building somewhat, on Friday we did somewhat of that. Now I can also see that we have slowed down. Friday, I think, it was a nice boost in price, but I think in terms of market speed, I can see that it's slowing down a bit. The other thing I'm noting too is the point of controls are all at the upper end of the initial balance here. So that's almost an arrow pointing upward is kind of how I'm looking at that. And we still have that here for Friday. So I am in no way going to make the same mistake as last week and having a quote slightly negative bias. I just don't think it's and the VIX is telling us several things here now, besides that the markets are in risk on mode, okay, because we have a very low VIX. The other thing it's telling me too is that the market is likely to do some sideways action. It's sort of saying that there's going to be very little movement within a period of time. But there's some nice sayings, where the VIX is low, time to go, VIX is high, it's time to buy. So there's a lot of meaning in these old adages, probably wouldn't be a great idea to be a long-term investor, entering the market at these prices. Let's now treasuries. I said last week that we're getting some top side resistance and likely to take 5 back down to trend line support, and and that's what happened. So I got one on U.S. Treasuries. Let's see now this week, since we are finding that trend line support, my initial reaction here would be, broke below that, and we gapped up, but then that was sold into down to this trend line, and there's just a lot of volume going on in this area here. My initial guess would be that we would see some higher prices in U.S. Treasuries. This previous top resistance right here at around 113, I think would be first resistance. Probably not as strong, of course. The higher you go, you get up into here at the 114 area, would be where I would look to see possibly if this could be a left shoulder, right shoulder here, which I would draw a neckline in that case down here and say if we broke below that neckline, then we might do the distance between here and this neckline. But I don't like to read too much into chart patterns, at least until they break that confirmation area, which in this case would be a neckline. And that's just looking too far ahead. For right now, I think probably see some action off of these support. This is a pretty strong support, this trend line. So I think U.S. Treasuries are looking positive for the week. I'm gonna say now the U.S. dollar euro had some interesting things going on in the Eurozone. Let's see here. First, the U.S. dollar. And this is what I'm talking about, climax volume. This is just a no-brainer right here. When you see an up-thrusting candle, and it's closing below midpoint, it closed all the way down there, on this huge volume spike compared to, and you can look back, this selling climax volume and it exceeded that, which I think is just huge when you consider that this was larger volume at a higher price. And I would have expected it to even go down further, but I was amazed to see Friday. This is above average volume buying into that. So my prediction would be that you're going to see a tight sideways range. I think we're seeing indecision, and I would call that range between these candle bodies. And I think, the U.S. dollar is probably going to do some sideways action. And looking at the euro is almost just a mirror image of that. The U.S. dollar index is against a basket of currencies, so it doesn't necessarily have to coincide that much with each other. But this is the euro against the U.S. dollar, so you should expect to see some sort of mirror type image. But again, we had the same thing. We had some just hit me in the head with a hammer climax volume. I'd love to see that. And that was a game changer for me. So after seeing that, I would expect prices. And now if I take this whole range here, and I say, okay, this is midpoint of the range. And let's see, the candle body, I think was, I'm just guesstimating. Here's midpoint of that. I'll call this consolidation. So, unlike the sideways in the U.S. dollar, I think the euro is likely to do some sideways range-bound trading. But I think my bias would be, upward from there, just because it's closing above the midpoint of this body. And it didn't even try, anything down in this range. And this is sizable volume here on Friday. So I think we're seeing a little bit of consolidation in the euro and neutral sideways with an upward bias. Because volume is that's what I'm reading in volume. Yeah, interesting events. The euro cut interest rates, and this was sort of a, I guess this was all pricing in that interest rate cut, and this was sort of a sell on the news in reverse. Of course now it's gonna buy in reaction to that which was priced in. On top of that, they're talking about negative deposits, where excess money in the central bank, they're going to charge the banks interest. They're trying to get banks to loan money, and it'd be interesting to see if that works. I'm used to seeing the game of hot potato playing in the institutions between stocks and sectors, but between cash and banks, that's going to be interesting to see if that works out. That could be something else, that if banks actually did lend more money, that's what the Federal Reserve would like to see banks do, and that's something that you might see Federal Reserve taking on. In any case, and I also hear talk about they might do a QE buying bonds. Not so sure that would include treasuries. They've got a lot of options available there. So that's a wait and see thing there. So I think I'm going to conclude this video. I think that's all I got. You can find me at hotstockmarket.com. I have a weekly trading log group where you can see what I'm trading. I've got some non-index trades. I've got a few index trades that I keep track of. You can see that all here in my log. I'll have these images uploaded shortly. Also want to point out another spot here in Reddit, subreddit Stock Market. Good place to find information. And if you're out there in lurk mode and you have any questions, there's no such thing as dumb questions. Get some good discussion and responses going on here. Big Bear just recently had an excellent submission here on the VIX, and getting some good discussion on that. So get in there, join the discussions, and I will see you all on the boards.